So what you're about to watch is a private live ICT training that I give exclusively to just my students. Now, this is the stuff I usually only reserve for the people inside my community, but it was so valuable that I wanted to share it with all of you. We covered everything from how to read price action, liquidity sweeps, OTE, and how to identify your winning trade of the day. So lock in because this one is going to be a banger. So, gold and Nasdaq was what we were primarily focusing on this week. Let's go ahead and replay. Let's start with NQ, right? Let's start new. This is Friday, Thursday, Wednesday, Monday. Let's review everything that happened this week, what we could have did better, moves we should have taken, moves we should have avoided. And what's the first thing I see on Monday when trading Nasdaq, right? In our previous lessons, I was teaching y'all about the fundamentals of price action. Lower low, higher high, high, low, break, high, sweep, lower low. What does this tell me? This tells me that we're bearish. This high here just swept this high and put in a new low, which was this high here. This high should be protected. That's what that tells me. If this high should be protected, I am bearish until this high here gets taken. So what do I actually want to see? I want to see something like this. This is the 1 hour time frame. So we always start all our analysis on the 1 hour time frame. I only ever go to the 4 hour or more when I'm genuinely just confused about the day. So what is this here? This is a 1 hour gap. 1 hour fair value gap. Cool. As well as 1 hour liquidity, a high inside of it that we can sweep to continue this bearish momentum. This is our protected high. We do not want that taken. Let's drop down to the 5-minute time frame. So on the 5-minute time frame, it's perfect. Why? This is London highs that we want to see get swept. Tied as well with previous Asia session lows that created a high, whatever. So what do I want to see? I want to see something like this. That's what I want to see on Monday. This is how we just use the 1 hour to determine bias, and we're using our session liquidity model to determine our entry. Let's play it out. Okay, so here is where I would have liked to see a reaction to continue lower. We didn't quite get that. We're displacing higher. I don't want this high taken. If this high gets taken, we're bullish. And I'm not targeting this high yet because we are in bearish order flow. The only time I start looking for longs, I don't care about this expansion ripping without us. Learn to sit on your hands. The only time I start looking for longs is until this high here gets taken. Why? Because that's the liquidity sweep that put in a new leg lower. If we're going to be bearish, we shouldn't take out this high. If we're going to be bullish, we're going to take out this high. Then you can look for some type of continuation model and target Asia highs and all that fun stuff. Okay. Anybody who's longing this fair value gap, they're probably going to get cooked unless if we were actually really bullish. But let's think about it. This bullish leg here didn't sweep any liquidity to give us that bullish move. This one here kind of did. It was swept this low here, but on the 1 hour time frame, we're still very bearish. So 1 hour beats 5 minutes any day of the week. Would you look at that? Okay, boom. We start displacing back into the 1 hour gap. I like it. Even though we did close above this 1 hour gap here, you have to understand and read price action. That's why we always do our analysis first. This is that zone here that we don't want price to take. So even though we closed above this, not really great price action, the very next candle is displacing back into it. Great price action. Now you can start looking for some type of short entry to go to take a short position. Boom. I'm not FOMOing into this, but technically this is your trade. Technically this is the setup, but it's horrible. Yeah, the RR the RR is disgusting. Why? This is the London session high or whatever. We inverse this gap here and boom, we can start targeting London lows here and Asia lows here, but God forbid, never take this. Okay, Day, how do we catch this trade and have a smaller RR? First step, we can drop down to our 3-minute time frame. Cool. On the 3-minute time frame, what can we do? We're trading below our London session high. We can just simply get our continuation model. We can get maybe something like this. And then we can now we can have our entry. Where is it? We can have our entry be something like this. Now we're talking. So let's wait. Guys, don't take this. I know it's the model, but the model is just entries. I'm trying to show you how to read price action from the 1 hour down. You know we're bearish on the day, so it doesn't matter. This is the model, right? Sweep of liquidity, tap in a session level, Asia highs, inverse fair value gap. Guys, come on. Like, learn to read price action and don't pattern trade. If we were bullish, this is a great time to take longs, but we're not bullish. We're bearish. We're trying to see some type of bearish pattern. Like right now. This is a good short right here. I keep messing up where my tool is. Jesus. Short right here. Stop loss here. Even here, your stop loss isn't as bad as the other one. Boom. 1 to 1.5. And I remember this trade. We should just flush. Boom. Are you serious? Are we serious? Okay, TP. Even if you went break even here, you would have never gotten taken out. You would have just had a emotional roller coaster. But guys, did you see how we were able to use top-down analysis from the 1 hour and then taking it lower? Did y'all see that? That's how you read price action. That's how you create a bias on the day to where when you're seeing this, right? Keep in mind, we wanted this London high to be swept and then displaced lower. That would have been top tick price action, right? Respecting the 1 hour gap, taking out the London session high, while also taking out this high here, the internal high, for us to continue lower. But instead, we displace above it. Don't just switch your bias all of a sudden. Now that you look at it, on the zoom out a bit, this just looks like a manipulation leg and then V-shaped recovery lower. That's all that looks like. Don't just shift your bias because we determined that for us to go bullish, this high here has to be taken. Let's look at gold. I don't even know what I'm looking at right now. Gold has been so bad. Okay, what are we looking at on gold? I can easily tell we've taken out this low. Boom. I can easily tell we have trendline liquidity right here. Boom. What can I easily spot before we start doing some major technical analysis? I mean, I can easily tell we're bearish, but we've already taken out the objective. This was clearly the objective. Is there another objective? Maybe this low, but that's far. We're going to get some type of reaction here. Okay, cool. Boom. We just figured out our short-term objectives and what we're doing. Now we can start diving deeper into the charts and really seeing, okay, we have a 1 hour gap here. We have the trend line liquidity here. This is without Les's book map. If learns how to do this and then he adds his book map, he'll be unstoppable. 15-minute time frame. What's going on? Accumulation, manipulate lower. Now it looks like we're distributing. I do want to see longs on gold, but we have equal lows here. Look at this. What did I tell you guys about equal lows with the session level? Is that it's very, very risky, like very, very risky. More than likely, these will get taken out today. So yeah, I remember this trade. So we're just gonna go for longs. More than likely, these hourly highs is where it'll react from, while taking out this trend line liquidity and potentially taking out London highs in this hourly high. I don't know why it doesn't extend all the way. Let me just draw it out. Guys, this is how you tell this is how you give yourself a narrative. So now I know if I did take a long position on this day, I'm not holding two all-time highs. I'm probably holding for a 1-to-1, holding just till this hourly gap. Why? Because I've already determined that, yeah, I am bullish, but this is very dangerous and price still has an objective to come back here to take this out. I am bullish though. Look at this V-shaped recovery. The moment we took out this liquidity, phew, V. Now we're accumulating. Maybe come sweep liquidity to go higher. But let's see what it gives us. I think we take this trade on the 3-minute. Okay, this is the trade we took here. High, low, higher high, lower low. Fair value gap. Take it out. TP1, TP2, start of this fair value gap, and then TP3. And what do we get? TP1, 2, then stop loss. But we knew this. We expected this. For me, what ended up happening was it hit TP1, then obviously took me out at break even, and then TP2. I didn't even have TP3 up here because why? I can almost guarantee you we're definitely gonna take that out. It's just plain. Are we serious? Why are you embarrassing me, Gold? It's just taking too long. Do we not take that out? Wow, we didn't. Okay. We don't take that out. Okay. Maybe it'll take it out later this week. We're still on Monday, aren't we? Yeah, we'll probably take it out later this week. But gold was the trade we ended up taking on gold. If we had been patient to wait for Nasdaq, would have had a much better trade. But it's whichever setup I see first. That's why we do these weekly recaps to see how other pairs would have played out, depending on whether we were patient or not. But that was Monday. Does anybody have any questions about Monday? What trades did y'all take? Nothing? MNQ, let's go to it. Okay, where? Oh, okay. Yeah. Did you take those shorts? Yeah. Yeah, so 850 something. Good. Yeah. Yeah, but the crazy thing is though, if a newer trader, somebody who just learned my strategy, took that trade with the large stop loss, I will tell them, I'm like, okay, you're understanding the concept of what I'm trying to teach you. You just haven't understood the aspect of patience because technically that is the setup. But then your stop loss just looks like Mount Everest. Don't take that. But he's new, so he's understanding like, okay, this is something Daniel's looking at. The stop loss is huge, but I don't know that my stop loss is not supposed to be this huge. So I'm just going to take it. And the trade still would have won, and they would have seen nothing wrong with that trade. But obviously, as they continue to show up to this meetings that I'm showing them, that I'm doing for them, then they'll start to learn a little bit more about what types of trades to take versus not to take. Okay, I want to move on to Tuesday. Move four joins. Okay, guys, let's do the exact same technical analysis that we did. This high is protected. We just put this high on Monday. This high is protected. Why is this high protected? Sweep of liquidity, we put in a whole new low. These highs are fair game, okay? Until this low gets taken. Cool. Let's drop down to, do we need to drop down anywhere? 1 hour time frame. Let's draw this out. I like this 1 hour because it's actually put a rejection and gave us a new low within this internal range. This 1 hour got inversed. I'm sure on the 4 hour, there's a gap here probably. Oh no, there isn't. Oh, but there's a liquidity void. Y'all don't need to learn what that is. Where's my indicator? Are we serious? Oh, what's the name of that indicator I've been using, bro? Shit. Guys, what's the name of that indicator that we use to check out the session levels? Anybody know it? Is it this one? Wait, but why did it delete my... Why did it... I was just using it. This is fucking ridiculous. When did it delete it? Come on. It's just using that shit. Boom. Why did you delete? Who deleted you? Doesn't make any sense. Oh, I think it was when I came here. Remove 6 drawings. Not everything. Okay, I'm back. We're back. We're back. Let's go over to Tuesday. Oh shit. MNQ. Okay. What's Tuesday? We already determined this is a protected high. We've already done all of that. This was the 1 hour gap here that we liked. Okay, let's drop down to the 5 minute. Boom. Guys, we are bearish, right? We're extremely, extremely, extremely bearish. This high is not protected, but I can almost guarantee you, fib, fib, this is discount. Let's go for a trade here. I can almost guarantee you, TT indicator about we are bearish. This should work. I'm not telling you that in hindsight. I'm telling you that because that's how price likes to move. Like, if you think about it, Nasdaq looks choppy, but it's really not. It's actually like respecting bearish trends really well. Like, look at it. Don't take out this high. Yeah, we're getting close to it, but it's not going to take it out. Now, don't take out this high. Now, temporarily, don't take out this high until this low is gone, right? Because we need to meet the objective. High, low, higher high. We haven't met the objective of this low yet. So don't take out this high until we've met the objective of this low, which overall, we still have this low to take out. But we are trending lower. We are bearish. So when we are bearish, you just take a range. What's our current range? This high swept this high, this high, this high. This high here swept this high while reacting off Asia high. So let's not take out this high, which we didn't. We put in a new low. Okay, let's take out something internal in here to continue lower. That's just bearish structure. So if you're bearish, this doesn't matter. You're pattern trading. Will it work? Yeah, maybe like a 1-to-1. There's no FEG here for y'all to take. Yeah, this definitely, if there was an FEG here, it would have won and you thought you did something. Guys, that's a horrible trade. It's the setup, but you have to understand session levels is simply just for entries. You still need to understand what we're doing on the 1 hour and looking below. You still need to understand why we're drawing these boxes. Why did I draw this box and not this box here? Why? Because this box was used and price rejected from it. So more than likely, this high might be, I'm not sure yet, protected. And this isn't even a 1 hour gap. I don't know why I made it 1 hour. It's not a gap at all. It's just an area in my, maybe I need a color code or give my fib a new code for boxes or whatever. I don't know. But I just want to see this high swept. I just want to see this in reaction. Okay. Oh, I went a little far. Wow. Okay, guys, what is this? Accumulation, manipulation. This looks like some distribution to me. That's what's looking like. It's so clean. Like, look at the reaction. It's so clean. Let's go on the 3-minute. There's an entry somewhere. Yeah, the 3-minute already gave us an entry here with this hourly gap here, or with this 3-minute gap here. Three-minute. Why would this trade play out? We've swept here, swept here. The only thing left for it to sweep is these London highs, where if it sweeps that, we can temporarily switch our bias to bullish. Does this trade? Yeah, it does. Let's go on the 5-minute. So, guys, I'll be completely honest. This week definitely wasn't a week where you to pattern trade. It definitely wasn't. But if you're using price action and understanding how price genuinely moves, they were all there. Let's look at gold. What even is this? Oh, Lord. I'll be honest, even looking in hindsight, I don't see how I would have caught gold. We don't even sweep this high. Did anyone take a trade on gold? Anybody? Nope, no trade on gold. Nobody. Yeah, I don't see how I would have caught that. Was that Jack? New York session, Jack? Okay, yeah, I need, let's look at that. I don't see what I would have taken here. This shit was just dumping. Um, maybe. Okay, TT indicator trade here after liquidity sweep here. Okay, maybe this was a trade you took. Yes, maybe this was one of them. Maybe. Yeah, sweep, aggressive displacement through the TT indicator. Okay, yeah, maybe. I know you targeted London lows. This was probably one of the trades you took. That's the only one I'm seeing. Yeah, you took yeah. That's the only one I could see. Yeah. Um, any other trades? I don't see. I don't see what I could have taken on gold. I don't see how I could have predicted this either. It's like gold is extremely bearish then. We don't even take out. Do we take out those highs? Yeah, gold seems a little tricky this week. Like equal highs up here. Are we serious? Come on, gold. Yeah, I'm not reviewing that. There's nothing there. Yeah, I don't see anything. Even looking at price already happening, I don't see it. Yeah, okay, let's move on. Let's look at Wednesday. I didn't even do any analysis. Guys, what's going on? We are officially transitioning bullish. Took out one of our main objectives, immediately displaced, putting a higher low. Now we're breaking structure to the upside. This high here, put in this low. This high should remain intact to flip bearish, but more than likely we're going to break this high here to flip bullish. This is how you can start seeing where the shift happened. This high here, put in the official low. It got broken here. Price failed to make a new low, and instead it gets broken again. We're flipping bullish. So if you want me to draw it out, it's like high, low, higher high, lower low, higher high. This looks a lot like bullish structure to me. So we're gonna come and catch this to catch this. Boom. We started off on the 1 hour and we determined our structure. We are bullish, objective here. Is there any gaps to draw? Maybe this one. I don't even, do we get back in that? Maybe this one. I don't really care for it though. 5 minute. Okay. Yes, I am bullish with this clear objective here. This is Asia sessions high. Okay, so more than likely this is how we bounce. So this 1 hour gap is very important. that I thought wasn't important before. Okay, so look, this is how you use the session levels to determine what to take. We just did all our analysis, and then it turns out the 1 hour gap is aligned with Asia session high. It's like, okay, now I want that taken. We start long first. Do we? Okay. As long as we don't take out this Asia session high objective, we can take shorts lower. I was wondering because I took this trade. I remember I even live streamed this trade. As long as we don't take out our Asia session high objective, which we didn't, we just took this short term, we can go lower with our ultimate target being this 1 hour gap. Why? This is the most optimal place for NQ to bounce off of. I haven't even checked, but man, I can almost guarantee it. Can almost guarantee it. Wrong tool. I can almost guarantee it. Ding, 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 ding. Discount. So because this is discount of this range, very, very beautiful. That price would do this and then do this, which I know that's what happens because I saw it at the end of the day. Three-minute. The inverse happened here. Now, guys, multi-time frame analysis. You are in this 3-minute trade, right? Let's say your stops is here or something like that. You're targeting here, but you want to get out of this trade when this 3-minute gap gets inverse back to the upside. Well, you're doing yourself a disservice. Why? We don't trade off the 2-minute or the 1 minute, but go check. Go check. Go see what price is doing. Look, this is a 2-minute gap that we're respecting. Go look on the 1 minute. On the 1 minute, this is a liquidity sweep right here. That look how many times we respected it. Once, twice, flush. Don't do yourself a disservice by staying on just that one time frame. We're using the 3-minute for entry, then we're using the lower time frame to keep us in this trade. So as I'm seeing the 2-minute rejecting here, the moment we got the displacement lower, you can now lower your stops even. But you're doing yourself a disservice by staying on the 3-minute, waiting for a candle closure, and then you get out of your trade. Number one, your stop loss is up here for a reason, or even up here for a reason. Number two is that you need to check the lower time frames to see what could potentially help your trade win. And then once those get invalidated, then you can start looking to cut your winners, cut your losers, cut whatever it is that you got to do. And this trade played out beautifully. Boom. TP1 here, break even, which is exactly what happened to me, break even. If your stops were here, you got stopped out until we're here at first. But TP1, break even, that's fine. Do we react off of this hourly gap? Yeah, we do. But we don't actually hit discount, which is a shame. I wanted to prove a point. But we hit the gap that was in discount, so I guess it's the same thing. But yeah, NQ did get a little bit tricky here. What time is it? 8:45. 8:45 comes. We take out the objective, but still come lower too, continue higher. That's how you can tell we're truly like bullish now. Yeah, we're bullish now for sure on NQ. We've broken out this protected high. This protected high just got taken. We are bullish for sure now. And that was Wednesday on NQ. I took the short, aiming for that 1 hour gap, hit TP1, break even. That's fine. Once we take out this high, we are truly, truly bullish. Let's look at gold. Gold has been trippy all week. Like, I'm already seeing, like, come on, are we serious? Like, gold has been trippy all week. Well, this would have faked you out too. If you took this gold shorts, I haven't even done much analysis yet, but if you took this gold shorts, I can just see that you got cooked. Which I don't even think it's a bad trade because it ended up playing out. Let's look at it. 1 hour. Yeah. I don't even see like, let me see if that was a bad trade or not. It doesn't look like one. This looks like some trendline liquidity to me. A lot of people hate on trend lines, but they work so beautifully. Even TJ can attest to that. It's when they don't work, then they become trendline liquidity. Okay, on the 1 hour, I don't see anything to react from, so maybe it should sweep out these highs. Maybe that's why it got stopped out, but let's see. We'll look on the 5 minute. No, on the 5 minute is perfect. So we're going to sweep out London highs while reacting off that trend line. Boom. Reaction. Boom. Entry. This is, yeah, this is a good trade in the sense of like, okay, Asia highs is right above. I won't lie, I probably will take this trade. I'll be honest. This doesn't seem like a bad trade at all. Let's do this. Let's see why it reacted the way it did. 0.618. Oh, wow. Yeah, okay. Now, real quick, before we continue, if you're getting value out of this so far, do me a favor and smash that like button and subscribe to the channel. That's the easiest way to tell YouTube to push this video out to more traders who actually need it. And if you have any questions, drop them in the comments and I'll reply to as many as possible. All right, let's get back to it. Stops you out, and then I think it reacts beautifully. Yeah, beautiful. Wow. Beautifully from the 0.618. Guys, start using the fib. Here, I've shown you all multiple times. Take this, use the fib. That stuff works beautifully. Use fibs. Yeah, it happens. It happens. Like, that's one of those, darn it, like, it happens. It's fine. What's up? I need to add should I? Yeah, I mean I could, but the reason why I don't is because I teach y'all everything you need to know about fibs in this. Like, I'm trying to incentivize people to do these, what's it called, weekly trade recaps. Because if I'm, let's be honest, if I'm making a module, right, I'm going to go find an example where it's worked. But when I'm doing the weekly trade recaps, I'm showing you when it worked and when it didn't work. Like, what was it? What's today? Wednesday? I was like, yesterday, Tuesday, I said, it didn't hit the zero point 0.5. So you just saw an example of the fib not working. And then I'm showing you today, bro, it tapped the zero point 0.6 exactly. Now you just saw an example of the fib working. But if I'm making a module and my whole goal is to teach you, I'm going to go through and find when it does work and then show you that one because I want you to understand what I'm talking about. But on the weekly trade recaps, there's no fluff like that. It's just me showing you price action real time. Like, there's no fluff. I'm not nitpicking which ones to show, which ones not to show. I'm just showing you. Each time I say, and I can guarantee it, that blah blah blah. Like, I don't know if it's gonna hit or not, but we're about to find out together. So I mean, I could make weekly. Mm-hmm. Okay. Okay. Yeah. I get what you mean. Okay. Okay, then that's different. I get what you mean. If you're trying to just understand the basics of fib, okay. Yeah, okay, I get what you mean. Yeah. Yeah, that'll help. That would work. All right, I'll do that. Okay. All right. I'll do a little short crash course here right now, but I'll make detailed videos about how to use the fib and all of that. Okay, let me show. Uh, okay. Discount discount is when you're in a long position or in a long range. Let me show you an example. When you are in a range like this is a bullish range, bullish range, here, bearish range. When you are in the bullish range, if you take your fib from the start of the range here to the high of the range, discount is anything underneath 50%. So the fib theory is that this is what I like to call optimal. Well, I don't call it that. That's just what it's called. Optimal trade entry between the 0.618 and between the 0.786, right? So optimal trade entry is pretty much saying if price wants to react from a level to continue going higher, number one, more than likely it'll retrace to discounts. That's underneath the zero point 0.5. And the best possible spot for it to give a reaction is in optimal trade entry, 0.618 to 0.786. So once we know that and we delete this fib, delete discount, we know this area is the best area. Then you can start looking for what's in this area. Okay, there's liquidity here. More than likely, price will sweep these liquidities like this, and then you can start creating like biases on the day, and then boom, boom. Okay, this is what I'm looking at. We're on the 1 hour time frame, but I'm just showing an example. This is what I'm looking at. And then if you now see, oh, it's tied with the London level, it's tied with an Asia level, that's when it'll work. Like, for example, let's delete this. Let's go back to this. Boom. Okay, how would I use a fib in this scenario, right? Okay, we are bearish. Am I going to draw my fib from here to here? No. A new range, maybe write this down, anyone who's learning, a new range starts from a liquidity sweep and a new low. So what does that mean? This is a liquidity sweep. This is a new low that it put in. So this low made the liquidity sweep, and the liquidity sweep put in a new low past this low. So this is my range. So I'm going to draw it from here to here. Now, where is discount? 0.5 or premium, because we're in the sell range. So premium is when we're in a sell range. You want to sell in premium and you want to buy in discount, right? But just know each time it's past 0.5 each time. Whether you're going short or longs, you want to get past 0.5. So this is 0.5. What's in? Where is our optimal trade entry? Optimal trade entry, 0.786 to 0.618. Cool. What's in our optimal trade entry? This 1 hour fair value gap. So what narrative can we now place or think of within the chart? Okay, this 1 hour fair value gap is an optimal trade entry between the 0.618 and the 0.786. So more than likely, if we are to continue going bearish, this is what I want to see. Boom. I use fibs mainly to create a bias. I don't necessarily use fibs for entry. That's where my session liquidity model comes in, or the TT indicator model comes in, which boom aligns beautifully on the 1 hour time frame. Okay, now we've determined our optimal trade entry in this range. We drop down to the 5 minute. What's also in this range? Boom, the session liquidity model. This is when you can now say, I'm looking for a sweep of London highs to continue going lower. And obviously for this trade specifically, it displaces a little bit past our level, but we understand that as long as this high is held, it's still going to work. And I can almost guarantee it. This is tapping the 0.786. Yeah, that's where we reacted from. 0.786. It's not exact, but I would have preferred it if we just did a sweep and continued lower, but I don't control the markets. And that's pretty much how you would use the fib tool when you're coming into a new day. So I'm going to show you like a live example, I guess right now on, we've reviewed Monday to Wednesday, right? So we're looking at Thursday now, correct? Hello, hello. Okay. First of all, did what I just said make sense? Like, I'm gonna make a detailed videos about this for y'all, but as of right now, did what I say make sense? Okay, perfection. Let's go, let's go. Okay, cool. Let's look at Wednesday, and I'm sure we're just gonna use the fib because I do just use the fib to create bias. No, we already looked at Wednesday. Let's look at Thursday. Gold has been tripping all week. Let's see if it does anything Thursday. We'll get to it. This high has been taken. We are going to get a short-term reaction off of it. I expect nothing less. .5 is all the way down here. Sweep to continue higher, potentially. We'll see. Okay. The 5-minute actually showed me a clearer picture than the 1 hour. Guys, London high has taken out Asia's high while we're in this key level. Long term, we're bullish now. We've broken this level. We are bullish. But you can't expect to not receive some type of reaction. We did it twice. Boom. We hit the level. Huge reaction. Come back, hit the level. Another huge reaction. We need to take out London low at least. Like at the least. Asia lows here. I mean, Asia lows at the least. Why? What do we know about the strategy? Session level 2, session level. We haven't hit the objective yet. And this low is also discount. Let's look at this. Do we get this? Okay, now we've hit our objective a little bit. Oh no, we haven't. Asia lows, we still have it. Well, this price action looks kind of disgusting though. How long has the market been open? This looks horrible. Are we serious? Okay, we're definitely bearish. Where was I? Thursday I was probably looking at gold. What is this? Oh, my camera's about to die. Guys, we're bearish on this, but this trade looks horrible. This should align. Okay, we want to see. Yeah, we should be bearish. Okay. Do we take out this low that's in discounts that we drew from earlier on the fib? No? Okay. Guys, this price action looks disgusting. Let's look at the 1 hour. Okay, if we could have found some type of entry coming from in here, yeah. I knew we were going to short, but it was like, there's no way to catch it. We don't get any type of inversion to the candle that finishes the move, so it's not a good trade. Maybe this 2 minute, but this 2 minute you would have had a top tick entry. So I'll be quiet. So I mean, yeah, yes and no. Let's look at gold. This week definitely was not an easy week. This looks like it's holding. Look at that, holding discount perfectly. That's the 0.5. Optimal trade entry is all the way down here with this order block, but price doesn't have to go all the way down there. Let's see. This 1 hour gap seems to be holding. 5 minute time frame. Boom. Bias of the day. Higher. Fibs. Boom. Okay. How would you have now not gotten faked out by this trade here? Look, you'd have gotten faked out twice. Sweep, inverse, but you understand where you're aiming for. This is optimal trade entry. Here and here. Okay, this is a protected low sweep. Okay, so yeah, perfect. This is optimal trade entry. This how to not get faked out. Sweep of session liquidity, inverse fair value gap, but we just created a bias of where we think price will react from. Same thing here. We don't really get it. You just created a bias on where you think price will react from. But in here, you get it. I'm sure on the 3 minute or wherever, there's some type of entry in here to get it because this is a good retracement into that. And then this should probably put it low. It should continue higher, maybe. Yeah, it's just price. Yeah, there we go. Price action is just like horrible. Wow. It doesn't move till 12 p.m. I'm off the charts by then. I'm not looking at that. But this is just how you use fib. This is just how you use fib. This is that optimal trade entry that I showed you about. Boom. Optimal trade entry we know is right here, 0.618. We don't trade order blocks, but it so happens to tie in with an order block. Some of you all probably don't even know what an order block is. That's fine. Just draw out the optimal trade entry, 0.618. Draw out the 0.5. 0.5 is right here. You know, price react on one of those levels. Go on the 5 minute time frame. Boom, it ties in with our session level beautifully. Now you know you're not looking for shorts, you're looking for longs. You want to see a liquidity sweep, but you want that liquidity sweep to also tap into this 1 hour gap. So yeah, I'm going to go on social media and say the session liquidity model, but we used a bunch of different things as well to help us with that trade. If you're just trading the session liquidity model and now you're trying to short this, you're going to get cooked because you're pattern trading. Like, you're going to get cooked. We're bullish. We're clearly bullish now. We've gotten now retracement into OTE, optimal trade entry, and now we're displacing higher. So that's gold. NQ just looked like it didn't do what I want. So NQ, the fib didn't work. Gold, the fib just worked beautifully. Are y'all seeing? It's any type of strategy. It works and it doesn't work, but you have to tie it with other things that you're learning. I'm sure Les on his book map would have seen orders here. Boom. And you would have caught that. I remember in one of these weeks I took an ES trade. Can't remember which one I took. I have to go look at my journal. Was it Thursday I took an ES trade? Yeah, whatever. Okay. Friday. Friday, Friday, Friday. Who traded Friday? I don't know if y'all are aware of. I don't know if y'all are aware of this, but we are definitely bullish now. I hope everyone can confirm. This protected high here just got taken. Look how it'll always almost give you a reaction, right? But that doesn't mean we're shorting now. We should have never taken this high in the first place. So I don't care about this reaction. I know we're bullish. And look, we come back and we fade everybody who shorted that. That's not even a trade setup. I can just see manipulation when it's happening. Like this high should not be taken because it already did some type of sweep. This high should not be taken because it already did some type of sweep. So now on the bullish side, let's look. I'm not gonna lie, the bullish side is not really putting in much protected highs. Like this would have been a protected low if we swept this low, but we didn't. I guess this might be a protected low, but it's not. I wouldn't count this as a true low. The only protected low I see is still all the way down here. So that means all of this is fair game. What's up? Who's speaking? Yeah, so a protected high or low is higher high, higher high, sweep. This is protected. So it's the same concept with this one. Higher high, lower low, sweep. This is protected because we now come down and put a new low. So if we're to continue bearish, this high here, I wouldn't want it to take out this high. It didn't. It came down lower. This high here has become a new protected high. Why? Because we're sweeping this high right here, and we're putting a new low. This high became a new protected high. Why? Because we're sweeping this inty baby high. I don't know if I would even really count it. And we put in, guess what, a new low. Boom. We start breaking this high. Okay, I'm seeing the trend is changing bullish, and it continues to break these protected highs. We're definitely bullish. So that's why on this high here, I wouldn't be like, oh, liquidity sweep. No, that was a protected high that should have held. We just broke it. We are bullish. This is not a liquidity sweep to go lower. You got what I'm trying to say? Okay. Okay, let's. Yeah. Without the sweep, it's fair game. That's why I just said I don't think any of these is protected. Like, it's all fair game. There's no, this low didn't sweep anything. If it had swept out this low, then yeah, this low didn't sweep anything. This low didn't sweep anything. Well, it kind of did. This low kind of swept. I guess you could call this a liquidity sweep, but I just don't like it. It looks really baby, like tiny. Like, you got what I'm trying to say? This low didn't really sweep anything. This low, did it sweep something? Yeah, this low is the only one that's truly protected because we swept this. But it's not even protected yet till we've taken out this high. You get what I'm trying to say? So let's look at what Friday did. Nobody traded Friday, so let's look at it fresh together. Okay, looks like we're about to do some type of retracement. This candle just looks like a retracement candle. Inverse fair value gap on the 1 hour. So we might come down and start taking these lows that aren't protected. Short-term wise, NQ has met all the objective. We took out Asia high. We've taken out Asia low now. I mean, it doesn't have to go short, actually. Okay, this low will determine everything if we get it. Yeah, we don't even get it. Okay, yeah, it was really bullish. Um, I can't. I don't see anything I'm catching here. This low doesn't even sweep. This might be a good short. Hold on, let me check. What time is it? 8:42. Let's check if that's actually a good short. Don't spoil it for me. Um, no, I don't really like it. Like, think about it. If we were in a trade, if we were in a 5 minute trade right now, isn't this our continuation model? Just ignore that this is the 1 hour. If this was the 5 minute trade right now, wouldn't we be in this trade? We would be. Why? High, low, higher, high, lower, low, inverse fair value gap. Like, this low shouldn't really be taken if we were in a 5 minute trade. But we'll see. This is on the 1 hour. This trade might give you a 1-to-1. Let's see if it gives you a 1-to-1. Like, you're shorting into these 1 hour gaps. It's not ideal. But then again, we do have these equal lows here. So yeah, ends up playing out. Now it longs. Yeah, then it longs. Hey, the low I talked about. Yeah, this low. Hey, yeah, let's not miss that. Let's not miss that. Hold on. I need to clear this screen up. I can't see. I can't see. Hold on. Take this off. Take this off. Yeah, look at that. Look at that. Look at that. The low I was talking about. Boom. What time is this? 9:20. Okay, we would have still caught this. Okay, we didn't take this because we're bullish and we didn't really like the short setup. Why would we take a short setup when price is longing? But guess what though? The short setup won. This is what I'm trying to tell you, that it doesn't matter if it wins or loses. You have to understand how to read price action to not want to take it. Like, I don't care if this won or not. Was it really a good trade? Yeah, it swept out London high or whatever, but you're longing in you're shorting in bullish order flow. Versus this low here was going to determine everything. Why was this low going to be determine everything? If you look on the 1 hour time frame, guys, this is literally our continuation model. High, low, higher, high, sweep, inverse, retracements to continue higher. This is what we trade on the 5 minute. We're seeing it on the 1 hour. If we're seeing it on the 1 hour, ladies and gentlemen, I can almost bet you OTE, ladies and gentlemen, this low determines everything, the range. Cool. Let's say it was at 7 when we didn't know this low determined the range. We're still trading, so I can teach you how to catch it in real time. We see this, and we're like, okay, I want to see a retracement back to this level. If you still draw your fib, no. This low is still determining everything. We're still waiting. We're still waiting. If you still draw your fib, this low is still determining everything. We're still waiting. If you still draw your fib, even up here, this low is still where? 0.6, 0.718 OTE. It still determines everything. Let's keep going. If you still draw your fib up here, Where's this low? OTE is now from here to here. Where's the low? Right in OTE, right there. Still determines everything. Finally, this was the high of the exact range. Low, right underneath OTE. No, like on it exactly. Still determining everything. Tap, higher. Long position. Why would I short when I'm bullish on the day? So we missed this trade. We didn't really miss it. We ignored it. Waited for the actual true trade. Tapping into our OTE of our range. The 1 hour is setting up our trade model, the continuation model that we love and trade. The 1 hour setting it up. The 5-minute inverse is up here. You get into your trade and are we serious? Are we TP? That is how you think when you are trading. That is how you use the different tools. Fibonacci, OTE, what's it called? Session liquidity model, the TT indicator. The TT indicator and session liquidity model, guys, are just entries. Those are just entry signals. They're not how to actually trade the market. How to actually trade the market is 100% top-down analysis. And I love using the fib a lot when doing top-down analysis. I never used fib for entries. I use fib to validate my entries. Some people actually use fibs for entries. I'm not comfortable trusting precision like that in the market. All right, that's a wrap. Now, I don't want you to just add this to your playlist and then tell yourself you'll take action later. Take action now, because that's how you start spotting the setups that you've been blowing past your entire trading career. And if you want me to help you with it, I'll leave a link in the description where you can book a call with our team and we'll figure out where you're stuck, what you're missing, and whether you're a right fit to actually work together or not. But if you're a bit newer to trading, start with this video on screen where I break down exactly what it actually takes to start day trading in 2026 before you put a single dollar on the line. I hope y'all enjoyed this video. Peace and love.